Here are additional FAQs on the stock market. 101. What is technical analysis? Technical analysis involves analyzing past market data, primarily price and volume, to forecast future stock price movements. It uses charts and various technical indicators to identify trends and make investment decisions. 102. What is fundamental analysis? Fundamental analysis involves evaluating a company's financial health, including its revenue, earnings, management, and economic environment. This helps determine the intrinsic value of a stock. 103. What is a dividend reinvestment plan? DRIP. A DRIP is a program offered by companies that allows shareholders to reinvest their cash dividends into additional shares of the company, often without paying commission fees. 104. What is a stock split? A stock split occurs when a company increases the number of its shares outstanding by issuing more shares to current shareholders. This reduces the stock's price, making it more accessible to investors. 105. What is a reverse stock split? A reverse stock split is the opposite of a stock split. It reduces the number of shares outstanding and increases the stock price proportionally. It's typically done when a stock's price has fallen too low. 106. What is a blue chip stock? Blue chip stocks are shares of well-established, financially stable, and reliable companies that have a history of consistent earnings and dividend payments, such as Apple, Coca-Cola, and Johnson & Johnson. 107. What is a market order? A market order is an instruction to buy or sell a stock immediately at the best available price. It prioritizes execution speed over price control. 108. What is a limit order? A limit order is an order to buy or sell a stock at a specific price or better. It gives the investor control over the price at which the order is executed. But there's a risk the order may not be filled if the stock doesn't reach that price. 109. What is a short squeeze? A short squeeze occurs when a heavily shorted stock's price starts to rise, forcing short sellers to buy back shares to cover their positions, which drives the price even higher. 110. What is a market maker? A market maker is a firm or individual that buys and sells securities at quoted prices to maintain liquidity in the market. They ensure there is a buyer and seller for securities to facilitate transactions. 111. What is a stock exchange? A stock exchange is a marketplace where securities, such as stocks and bonds, are bought and sold. Major examples include the New York Stock Exchange, NYSE, and the NASDAQ. 112. What is a ticker symbol? A ticker symbol is a unique series of letters that represents a particular stock or security on the stock exchange. For example, Tesla's ticker symbol is TSLA. 113. What is a price-to-earnings (PE) ratio? The PE ratio is a valuation metric that compares a company's current share price to its earnings per share, EPS. A higher PE ratio may indicate that the stock is overvalued or investors expect high growth. 114. What is an IPO, initial public offering? An IPO is the process by which a private company offers shares to the public for the first time, transitioning from being privately held to publicly traded. 115. What is a secondary offering? A secondary offering occurs when a company that is already publicly traded issues additional shares, usually to raise capital. It can be done by the company or by existing shareholders. 116. What is a leveraged ETF? A leveraged ETF is an exchange-traded fund that uses financial derivatives and debt to amplify the returns of an underlying index, aiming for greater profits or losses than the index itself. 117. What is a margin call? A margin call occurs when the value of an investor's margin account falls below the broker's required minimum level, prompting the investor to deposit more funds or sell assets to cover the shortfall. 118. What is a margin loan? A margin loan is a loan taken out by an investor from a broker to purchase securities, using the existing investments in the margin account as collateral. 119. What is the difference between a growth and a value investor? Growth investors focus on investing in companies with high potential for growth in earnings, while value investors look for undervalued stocks that are priced lower than their intrinsic value. 120. What is a sector ETF? A sector ETF is an exchange-traded fund that focuses on a specific industry or sector, such as technology, healthcare, or energy. It allows investors to gain exposure to a particular sector without picking individual stocks. 121. What is a diversified portfolio? A diversified portfolio is an investment strategy that spreads investments across different asset classes, such as stocks, bonds, and real estate, to reduce risk. 122. What is the efficient frontier? The efficient frontier is a concept in portfolio theory that represents the optimal combination of risky assets that offers the highest expected return for a given level of risk. 123. What is a stop limit order? A stop limit order combines the features of a stop order and a limit order. It becomes a limit order once a specified stop price is reached. It ensures that the order won't be executed at a price worse than the specified limit. 124. What are ETF dividends? ETF dividends are payments made to investors from the income generated by the underlying assets held in the ETF, such as dividends from stocks or interest from bonds. 125. What is an actively managed fund? An actively managed fund is a mutual fund, or ETF, where portfolio managers make investment decisions based on research, market forecasts, and personal judgment to try to outperform the market. 126. What is a passively managed fund? A passively managed fund is a mutual fund, or ETF, that aims to replicate the performance of a specific market index, with minimal intervention from fund managers. 127. What is insider trading? Insider trading refers to the illegal practice of trading a company's stock based on material, non-public information about the company. 128. What is a trading halt? A trading halt is a temporary suspension of trading in a stock or security, often due to significant news or volatility, to allow investors to absorb information or prevent disorderly trading. 129. What is a capital gain distribution? A capital gain distribution occurs when an investment fund, like a mutual fund, distributes the profits made from the sale of securities within the fund to its shareholders. 130. What is a systematic investment plan, SIP? An SIP is a method of investing a fixed sum regularly in mutual funds or ETFs, allowing investors to take advantage of dollar-cost averaging over time. 131. What is the difference between an IPO and a direct listing? An IPO involves the company issuing new shares to raise capital, while in a direct listing, the company's existing shares are listed on the exchange without issuing new shares or raising capital. 132. What is a dividend stock? A dividend stock is a type of stock that pays regular cash dividends to its shareholders, offering a consistent income stream in addition to any capital gains. 133. What is the